Very good morning to all of you from Latitude, South Africa. My name is Ilana Meyer. I am the Director for Latitude for Africa, and I am fortunate enough to be based at the beautiful Val de Vie estate in the Paul Franschhoek Valley. So you would all know as South Africans that it snowed around us in the last couple of days, so it doesn't quite feel like spring yet. I'd like to welcome all my Latitude colleagues, my RIF colleagues, as well as all their clients. Although we initially planned this presentation to focus specifically on the South African market, I think the more we discussed it internally, the more we realized that all our clients all over the world had similar concerns and could value this presentation. So typically people are concerned about geopolitical risk, the social security issues. Everybody wants to hedge their currency in terms of their economy. So this is not a uniquely South African situation that we are faced, and therefore we welcome all our clients from all over the world. To my South African clients, welkom. Ek hoop julle geniet die aanbieding. To the rest of our audience, I will keep it in English, and I hope you enjoy the presentation with us. In terms of housekeeping, we do have the ability to ask some questions. You were asked when you're registered to pose some questions. We'll answer those after the presentation, but please do use the Q&A tab and pose your questions, or in the chat group. We'll monitor those and we'll answer as many of those as we can after the presentation. I think before we start with this journey, it's important for our clients to do their own due diligence on a business. This is a significant portion of your wealth that you are planning on investing, and therefore it's important to know who you're dealing with. From Latitude's point of view, when I saw the slide the first time, I had a chuckle about the 100+ years of collective industry experience. But when you consider that our industry is not that old, it's about 20, 25 years old, having people in our business that have been there right since the beginning of the citizenship and residency business is really powerful for us, and it's a valuable tool for us to use in terms of the relationships and the experience when we offer advice to our clients. So as a business, we focus on citizenship and residency by investment. We offer that advice to our clients. So we don't own our own developments. We specifically come at a client's problem from an advisory point of view, where we look at what the ultimate solution is that will work for you. So although you're all registered for a Portugal presentation today, after we've done the advisory process, there might be different programs that are more suitable for you. So I'll talk a little bit about those in a moment. In terms of government advisory, the reason why we put this in our slide, we often get asked why the programs are so different and why can't I do the one thing the same as I do in another country. And we work very closely with governments to make sure that we understand what their requirements are, and very often we're involved in setting up their citizenship and residency programs. And just like us as clients have specific needs and requirements, so do governments have specific needs and requirements when they launch a program. So over the last 9 years since Latitude was launched and ultimately merged with RIF Trust, we've helped 1,500 clients to successfully apply for citizenship or alternative residency. So from a due diligence point of view, I think you should have a look at what we can offer you as a client before you make that decision. Very interesting looking at this slide. What we're talking about today specifically is the residency by investment side, but we often get asked about tax residency. And once again, as South Africans, our global tax position is very different to the rest of the world. But you do need to have cognizance of the fact that there are tax residency programs available. They might not be suitable to you, but we can certainly have that consultation. Sometimes it's easier to just apply for citizenship. It's a phenomenal amount of paperwork that's required for any of these programs. But very often in the last 18 months or so, I've had clients come to me and say, can we just, what is the quickest way I can get citizenship so I can have a passport, so I don't have to wait for government to renew my passport, to issue visas. People have to go places and do things. And I think there's security in having two passports. Sometimes it just adds to global mobility. Many of us on this call only have one passport and don't have the ability to travel at the drop of a hat. And therefore, having a second citizenship that comes with a passport that offers global mobility is very valuable. However, today we are focusing on the residency side. Portugal is not a citizenship program. It's a residency by investment program. And if you do it well and you follow the rules, you will be in a position to apply for citizenship after 5 years of holding residency. So it's not as easy as just investing and getting your citizenship. You do have to go through a process and jump through a few hoops. in order to obtain that citizenship at the end of the day. This is probably the best slide ever that explains why Portugal is such a popular program for all of us, not just for South Africans. We deal with clients from all over the world. And many of my consultations start with somebody saying, I live in a beautiful place. Like those of you that know Val de Vie, people that live here don't really want to leave. But we do want to give our children better opportunities. We want to have better education opportunities. We're looking for mobility. We're potentially looking for a different place to retire. And I think what Portugal does when we talk about a plan B or an insurance policy, it actually allows us to imagine that we could live in a place like that. It's very similar to the coastline of South Africa. It's reminiscent of maybe areas like Clifton or Camps Bay. So people can imagine moving to Portugal and being happy there and making a good life there. And when I introduce João in a moment, he will talk a little bit about his shareholders. Some of them are South African. And they've told me that the reason they were so attracted to Portugal is they all started their golden visa process years ago and spent significant time there and ultimately decided that the lifestyle afforded them in Portugal was just too good to not move there permanently. Some of them have taken up cycling, although they use e-bikes. Apparently the hills are steeper than they look when you are on a tourist bus. So they all cycle around the valley of Sintra. But if you go back to the reasons why people would look at Portugal as an option, it has a very good business infrastructure. It's very business friendly. It's very tax friendly from a business structuring and setup point of view. The art and culture scene is very busy and very active. The open area markets are back. The open culture and art shows are back. People move to Portugal because they can enjoy all of those things. The infrastructure, I think, is very important. Many of us come from countries where the infrastructure is woeful. And when you go to Portugal, you have the benefit of really good infrastructure. And it's not just the road infrastructure, the railway lines, for instance. There's nearly 3,000 kilometers of railway track that connects the east to the west, north and south, inland to the coast. So it's very easy to move around. Multiple international airports as well, so very good airlift and a very good education system. So those are some of the reasons why Portugal makes a lot of sense to us, just purely from a lifestyle point of view and envisaging where you could possibly one day live. If we look at the actual golden visa requirements, one of the things that makes Portugal very attractive is the fact that they're very family focused. They do want you to be able to include your whole family. There are some minimum requirements though, and this is another reason why a consultation is important after this presentation. It's because you can include your family, you can include your children, even if they're older than 18, but the requirement is that they have to be dependent on you and they have to be full-time students for the whole period of the residency term. So for the next 5 years, your child has to be dependent, single, and a full-time student. You can also include parents. Initially, when they between ages of 55 and 65, you can include them if they are financially dependent on you. But as soon as your parents reach the age of 65, the Portuguese law automatically considers them dependent on you, whether they are or not. Doesn't matter, but a 65-year-old parent can be included without having to prove that they're dependent on you. The investment only has to be held for 5 years. And I think this is also important. When we look at these programs, we shouldn't look at it as a cost. We should look at it as an investment. And that's why working with a company like Equity that offers such a good investment program is so important for us, because this is a large chunk of money. And you want to be sure that when you make this investment, you're going to have a yield, you're going to have a good return, you're going to have capital security in the long run, because you're investing a large chunk of your money. In terms of the actual requirements, when we compare this program to the bigger residency immigration programs like Canada or Australia, where there's significant requirements to qualify, in Portugal, all you have to do is be an honest business person, get a police clearance certificate, and have the funds to invest. You don't have to prove your education. You don't have to prove your other financial means. You don't need any managerial experience. And most important, it has a very limited stay requirement. So you don't have to pack up and relocate in order to ultimately qualify for citizenship. Of course, you can if you want to, but you don't have to. And that's an important differentiating factor between Portugal and some of the other golden visa programs. Probably most important for me is the last 2 points. is the fact that this program is supported by government. It was created by the government specifically to benefit the Portuguese economy and the real estate market in 2012. And since then, it's gone through some enhancements, but it's supported by the government. It's a program that is well documented. It's got a smooth process, and it gives you exactly what you expect. So we know when we start the process what the steps are, and we can share those with our clients so that there's no surprises further down the line. Once you obtain your residency card, what then happens? You immediately get visa-free travel to the whole of the Schengen. You have the opportunity to live in Portugal, to study there, to conduct your business activity there, to spend as much time there as you wish. So you can move there and live there permanently, but you don't have to. You only have to spend a minimum of 7 days per year or 2 weeks in every 2 years there. Total of 35 days over five years in order to be allowed to apply for citizenship. Of course, not everything is as easy. The stay requirement is low. The investment is excellent, but you do have to learn to speak Portuguese before you are allowed to apply for citizenship or residency. So that's something that one has to keep in mind. I do sometimes have consultations with clients that just laugh at me and said, there's not a chance that I'm going to learn to speak this language. And if you know that, then you know that this is not a good program for you. But if you're willing to make that effort, you can obtain one of the best passports in the world. There are multiple investment opportunities available to our clients, and we've all seen the flurry of activity in the last few months where people have been pushing certain solutions, and that's because the rules are changing. In January 2022, we are going to see an increase in some of the minimums, and we're going to see limitations in terms of some of the other opportunities. If we start with fund option 4, which is what we're focusing on today with the equity investment, this is where you're allowed to invest 350,000 euros in a real estate investment or venture capital fund. And Zhao will talk a little bit more about their specific funds. The other opportunities are also changing. So both the real estate option 1 and 2 is changing, where at the moment you can invest those minimums in any residential or any type of property anywhere in Portugal. But this is now changing as of January. You will no longer be allowed to invest for purely residential purposes. You will still be allowed to invest in office space, for instance, or in touristic developments. So the development hasn't stopped, but the developers have all changed their focus away from smaller residential developments that qualify for the golden visa, more towards residential or to more touristic opportunities for clients. So resort hotels, managed hotels, serviced hotel apartments, etc. So the requirements are changing, but the options will still be available. The only option that is not changing is real estate option 3, where you are allowed to invest 280,000 euro in any type of property in a regeneration area, but in a less densely populated area. So that would be areas like Coimbra, Évora. Zhao will correct my pronunciation there. I think I said that right. And then the last option is the cash option, where you can invest 1 million euros in a bank account, but this is a bank deposit. So you make a cash investment, and we all know that the yields in Europe is woeful at the moment. So if you really want 100% cash stability, then I guess that's a good place to go. But it's not really a good investment for most of us, because there's no yield and there's no capital growth on that. If we look at the actual process, I think this is also important that you understand that the 5-year clock for residency only starts ticking once your first residency card is issued. And at the moment, it takes anywhere between 1 to 6 months for us to get an application ready for submission. That is because you have to open a bank account, you have to get a tax number, you have to make the investment, take ownership of the investment, or in the fund's case, subscribe to the fund and get your share certificate. And then your application gets uploaded to the government website. And once you've made your first biometric visit, and you receive your first residency card, that's when year 1 starts for you as an investor. So you need 5 years after that before you're in a position to apply for your permanent residency or citizenship. Now remember the language test. You can pass the language test at any point during the next 5-6 years, but you are not allowed to apply for permanent residency or citizenship until you and the whole family have passed that language test. Interesting how they deal with younger children, for instance. If they're really small, of course they learn quite quickly. But they can be passed by their language school, for instance. The school can write a certificate or issue a certificate that says the kids can speak the language. Unfortunately, for the rest of us adults, we have to go through a proper language test to be assessed. Before I hand over to Zhao, and without stealing his thunder, I'd like to just mention a few reasons why we deal with equity. I've met quite a few of the equity shareholders and investors over time, and I really enjoy their pursuit of excellence. It is very seldom that you find a group of people that is so dedicated towards doing the right thing. And this has certainly been the case for me with equity. The client always comes first. They have an extreme focus on providing capital preservation, and they do very good due diligence on the whole process. So the corporate governance has been quite impressive to me, whereas many of the other funds available in the market was created specifically by single developers to fund their own investments. Equity doesn't own their own developments. They're not developers. So they really are a good investment option for our clients over the longer term. On this note, I'd like to hand over to João Hilario. He has lived in South Africa many, many, many years ago, but he assures me that he still remembers fondly his time as a schoolboy in Johannesburg. Unfortunately for him, not Cape Town. But I'd like to hand over to Zhao now, who will tell us a little bit more about the fund and the pros of investing with equity.
I'm João Hilario from Equity Capital, and I'm here today at the gracious invitation of Latitude and Ilana Meyer to talk a little bit about the Equity Capital Fund. First of all, I'd just like to say, Ilana, thanks for that very informative presentation. I think even I learned something, and I've been doing this for a while, but always very, very entertaining and very enjoyable listening to you, Ilana. So I'm going to jump straight into the Equity Capital Fund. I think Ilana touched on many of the points related to the Golden Visa program itself. And as more of an expert on the Equity Capital Fund, I wouldn't dare delve into anything else that Ilana has touched on. So I'll just leave it there, and I'll talk to you a little bit about the Portuguese Golden Visa qualifying fund market. The first thing I should mention is that it is a very recent market. So the first Golden Visa qualifying fund was launched in 2018. So that's just to give you an idea of how recent it is. And one of the problems when looking at a market like that, a market with these characteristics, is that there isn't a lot of track record. And in Portugal, there is certainly no fund that has reached maturity. So when you're looking at a market with those characteristics, it becomes increasingly important to talk about the teams that are behind each fund. And I think the Equity Capital team is certainly one aspect that sets us apart from the rest of the market. As Ilana touched on, we do have a very strong South African flavor within our team. And I was lucky enough to have lived in Johannesburg during the 80s and have gone to school there. But our shareholders, amongst our shareholders, we do have a few South Africans. And I think if you look at our team, you will very quickly understand that there is a lot of wealth of experience, both international and local, in three main areas. And those main areas are property development, construction, and financial services. And I think when you put those three together, I think it bodes very well for what we are doing at Equity Capital. So now just a little bit on Equity Capital. It's important to explain that we have a slightly different model here in Portugal. It's very usual for an entity such as Equity Capital that has a specific expertise to want to use that expertise within a fund environment. So what normally happens is that Equity would go and set up a fund, but we don't necessarily have to go out and set up a fund management company. That is something that can be quite cumbersome and costly. So the model here, it's very common for entities such as Equity to go out and engage a Portuguese regulated fund management company. And so that's just what we've done. So I'll walk through the service providers to the fund a little bit later on, but Equity Capital is the advisor and the founding unit holder of the Equity Capital Fund. So our role is really to use our expertise in property development and construction and financial services to go out and source assets for the Equity Capital Fund, assets that we feel will be of good value to the fund. We then present those assets to the fund manager and propose them to the fund manager's investment committee. And it is this investment committee that will analyze what we are proposing, look at it to see if it is indeed of good value to the fund, and if it is in compliance with the fund's management regulations. So I just wanted to give you that little intro on where we fit in and who is managing the fund. I'm going to, again, skip over all the golden visa related aspects of this, but I think just a little bit on investing in funds versus direct property investment in Portugal. As you know by now, next year there will be some restrictions in that you will no longer be able to invest directly in property in many of the most sought after areas in Portugal. So that option will tend to fall away. But if you just look at the main differences between investing in a fund and investing directly in properties, there is clearly a difference in cost. The fund option is more efficient in terms of cost. You don't have the hassle of managing a property from a distance. You don't have that challenge, which is buying a property in a foreign country that you're not too familiar with. Our advice is always anyone looking to buy directly is to come here first, rent for a while, get a feel for the place, and then slowly realize which areas of Portugal you prefer. In terms of costs, you have maintenance costs when you're investing directly in properties. You have property tax, municipal property tax every year. You have, if it's in a condominium, you'll have condominium costs. You have home and contents insurance. So I could go on, but that's just to give you an idea of how much easier it is to invest in a fund that's investing in property versus the direct property acquisition option. So just in terms of the service providers to the Equity Capital Fund, as you can see here at the bottom, you have Equity Capital that I've explained are the fund advisors. Deloitte are the auditors to the fund. Fundbox is the fund manager. So this is the entity, the regulated entity that will manage the fund from a regulatory and administrative perspective. CMS are the legal and tax advisors to the fund. The custodian bank where client money is held, and it's important to point out that neither Fundbox, the manager, nor Equity Capital, the fund advisor, hold client money. This is all held within a regulated financial institution, which is Banco Invest. It's a Portuguese bank, and as many of you probably know, if you are regulated in Portugal, which is a member of the European Union, then you are also regulated by the European Union itself. CMVM is our regulatory entity here in Portugal, so this would be equivalent to the FCA in the UK. So as you can see, it's a highly regulated market, and I think you will agree that we've chosen some pretty solid service providers to the fund. Now, just a little bit on the Portuguese prime residential market, because this is essentially what the Equity Capital Fund will be investing in, prime residential properties in Portugal. You can call them prime or you can call them grade A. I prefer prime, but that's more or less what it is. So this is the main focus of Equity Capital's investments. And I think just a sort of a macro look at this market, it's very common for foreigners to automatically assume that the prime residential property market in Portugal is highly correlated or dependent on the Portuguese economy. Now, this is simply not true. The reality is that the prime residential property market in Portugal is very much sustained. I wouldn't say entirely, but highly sustained by foreign investment. And so, if you're looking at middle class housing, then you could say yes, that it is dependent on the Portuguese economy. But prime residential is essentially dependent and sustained by foreign investment. Now, it's not just the Golden Visa program that we're talking about here. Golden Visa property acquisitions in Portugal in 2019, for example, only represented about 4% of total property acquisitions in Portugal that year. So there is a lot more going on here than perhaps meets the eye. We do have another program called the non-habitual resident program. And effectively what that does is it offers anyone who's lived outside of Portugal for the past 5 years as a tax resident somewhere else to come here, to live here, and register themselves as a non-habitual tax resident. What that does is it gives you a 10-year tax break. And so we have a lot of foreigners coming here for the lifestyle, obviously, but also for the fiscal benefits. If you look around in Lisbon, for example, you'll see a lot of Italians, Swedes, French, Germans, and they're all here for the same reason, and that is the 10-year tax break that they get. If you look at a high net worth individual from France with a pension, it is very likely that that person will be paying somewhere around 50%, sometimes even up to 70% tax on their pension. And what they do is they come to Portugal and they register here as non-habitual tax residents, and they only pay 10% on their pensions in Portugal. So what this does is it frees up a lot of extra cash. And besides sitting by the sea eating sardines, what these people like to do is to buy a prime residential property. So this has caused a huge demand for prime residential properties in Portugal. There is actually an undersupply of prime residential properties in Portugal at the moment, and it's due to this factor that I've just mentioned. But if then you add the cryptocurrency people who are coming here to cash out, Portugal is one of the friendliest cryptocurrency countries in the world. If you add to that the fact that we have a lot of digital nomads coming to live here, we do host the world's largest web summit annually. You add to that the independent professionals who are coming here. So there's a lot of movement towards Portugal, and this is all adding to that demand. We are often referred to as the Silicon Valley of Europe because of our tech startup industry here. But at the same time, we're also referred to as the Florida of Europe because of all the retirees that are coming here to live for the lifestyle again and the fiscal benefits. So all of this creates huge demand. It has created an undersupply of prime residential properties in Portugal. And as you know, when your supply exceeds your demand, then your prices tend to rise. In 2019 and in the last couple of years, we've had capital appreciation on prime residential properties of around 8.5%. So this is during a pandemic, and that's quite astonishing if you think about it. So what we have done at Equity Capital is we've created a platform of prime residential property developers in Portugal. So now here we're talking about our acquisition strategy. If you look at the fund market here, you will notice, first of all, that a lot of funds are investing in property of one type or another. But secondly, you may notice that a lot of those funds have been set up by a single property developer that is then repackaging one or two of its developments and advising its own fund to invest in its own developments. Now, when we were looking at the model we wanted to implement, we saw that model as a conflict of interest. So again, what we did, we wanted to do something different, and this is kind of the second thing that sets us apart, is the fact that we set up a platform of the top property developers, primary residential property developers in Portugal. And the agreement we have with them is that we get first access to their product. So before they put their developments out in the market, we get to look at them, and that means that we're able to cherry pick the best individual units from the best developers in the best locations. So we're cherry picking maybe one or two prime residential units from each of their developments. And at the end of the day, what we get is a portfolio of excellence with cherry-picked prime residential properties from the best developers. And we know that those properties are the ones that will be the easiest to rent out and the easiest to sell. Okay, we're buying these properties from them at a discount, so we're getting an off-plan discount from them, but we're also getting a bulk acquisition discount. So at the end of the day, we're buying properties for between 10 to 15% below market value, and that saving is passed on directly to the unit holders in our fund. Okay, so there's capital appreciation there right at the start. Now, the third thing that I think really sets us apart is the actual structure of our fund. So what we have is what is often described as an umbrella fund, which simply means that we have a main fund structure, and underneath that fund structure, we have segregated sub-funds. We are the only ones in Portugal at the moment doing this. I'm absolutely convinced we'll be copied soon enough, but it's always nice to be first. So at the moment, we have two sub-funds, and I'm going to focus on the first one, prime residential. As you can see in the pie chart there, prime residential is investing 100% of its cash in prime residential properties in Portugal. We are diversifying in the sense that it's not just apartments. You're looking at apartments, villas, townhouses, normally ranging from 1 to 4 bedrooms, but always located in the most sought after areas of Portugal. So as Ilana touched on earlier, I think you mentioned Ilana, all of the areas actually, well done, and the pronunciation was absolutely spot on. So we're talking about Lisbon, Greater Lisbon, the city of Porto, the Douro Wine Valley, the Silver Coast, which goes from the south of Lisbon down to, or just south of Lisbon, down to the Algarve, and then the Algarve itself. And coincidentally, these are exactly the areas that will be excluded. A lot of them will be excluded from the direct property acquisition from next year, January onwards. The funds, however, will continue to be able to invest in these areas. So there's another advantage there. You're having access to properties that you will not be able to have access to for golden visa purposes from January next year. As I've mentioned, we're buying from the top developers and we're buying off plan. So what we do when those properties are ready is we put them on the rental market, and we are careful to pick properties that are suitable for both short-term and long-term rentals. So clearly during a pandemic, we would opt for a longer term contract, but when tourism begins to come back, and it already is, and it's booming, then clearly short-term rental may be more of an option. When I say short-term, I don't mean the sort of Airbnb 2-3 days, talking maybe about 3 months to 6 months. That's short-term for us, but we will manage this in a way so as to generate as much rental income as possible for the fund. So these properties will generate rental income. That rental income will be pushed up to the fund for distribution to the unit holders, and that distribution comes in the form of dividends. So this is a dividend paying fund, but with a bigger focus on capital gain at the end of the term of the fund, but it will pay dividends on a quarterly basis. So in terms of return on this first prime residential sub-fund, I will ask you to just keep two things in mind. First of all of the returns that I'm going to mention are 100% net of any costs, fees, taxes, or profit sharing. And the other thing is that we at Equity have a habit of being very conservative when it comes to setting our target returns. So in other words, we prefer to underpromise and overdeliver rather than doing the opposite, which tends to be disastrous for reputations. So the net targeted IRR on this fund is 7%, this first sub-fund. And then the targeted net return on investment is 50%. Okay. Moving over to the second fund, sub-fund 2, balanced portfolio. As you can probably tell from the pie chart there, it's diversifying in a different way. It's diversifying in terms of the asset classes it's actually investing in. The yellow the orange and the green slices, those are all investments in Portugal. So many of you may know already that these funds are required to invest at least 60% of their cash into Portuguese companies that sit underneath the fund. And then those companies will in turn hold the assets on behalf of the fund, generate profits, and push those profits up to the fund for distribution to unit holders. So the yellow area on Subfund 2 will represent 50% of Subfund 2, and it will hold properties that will be similar to the ones in Subfund 1, but obviously different units. Then you have your orange slice retail commercial. What you are likely to see there are perhaps a couple of supermarkets with a very strong brand as a tenant, a 15 to 20 year lease with no break clause. And we all know that supermarkets have done extremely well even during the pandemic. So this tends to be a very safe investment. The risk of default on rental payments here is extremely low. The green slice, Portuguese development, here, instead of cherry picking individual units from developers, we will actually be financing a few developments. But it's important to mention here that we have a few rules. The first one is that we will try not to finance more than 25% of any one development project. The second is that we will only get in at a de-risked phase. And what I mean by de-risked is we'll look to get in once we know that the developer has paid for the land, the projects have been approved, the architectural plans have been approved. And so de-risked means less risk. Less risk generally means less return. But we know that this is not about knocking things out of the park here. We're not looking for double-digit annual returns. This is about capital preservation. So it's about capital preservation for our investors and ensuring that they get their permanent residence and citizenship unscathed. So we don't need to take any unnecessary risks here. If it were my shareholders, like the equity shareholders investing in this type of risk, I'm sure they would look for more risk and more return. But that's just because that's what they're used to doing on a daily basis. The next slice, European residential, we will be looking to pick up a few prime residential properties in other European cities, such as London, Frankfurt, Berlin, Amsterdam. In London, we do feel that Brexit may provide us with such opportunities. So we will be looking at this on an opportunistic basis, looking to pick up a few properties below market price and then put them on the rental market. The dark blue slice, European Venture Fund, this is quite a unique situation in that Subfund 2 will be investing about 10 to 15% of its cash into another European venture fund. And what this fund does is it invests in what we call blue chip startups. So things like Glovo, Tesla, SpaceX, but always at around what we call a round B funding phase. So not initial funding phase. So they do have some traction already. These companies this fund invests in. You would normally need a minimum of 50 million euros to invest in this European venture fund. We are getting in with about 3 to 5 million euros only. The reason being is that we will be co-investing with a sovereign wealth fund. And the reason we're doing that is because of the long-standing relationship our managing director has with that sovereign wealth fund. And so we will be co-investing together with the sovereign wealth fund in the European venture fund. This venture fund has had IRRs over the last couple of years north of 50%. Again, within our conservative approach, we've assumed only a 20% return on that slice of Subfund 2. So in terms of the overall return of Subfund 2, you're looking at a targeted net IRR of 8% and a targeted net return on investment of 63%. So just down here, you have a summary of what you should expect in terms of euro returns based on a 100,000 euro investment. And this is based on our conservative ROI and IRR, the same thing for Subfund 2. Now, the good thing about subfunds is you can mix, you can split your investment. You could, for example, put half your investment in Subfund 1 and the other half in Subfund 2. You are, of course, free to invest 100% in one or the other. The only rule is that if you do split your investment, you have to have a minimum of 100,000 euros in either one fund or the other. The other advantage of subfunds is that you can launch new subfunds quite quickly. If you were setting up the whole structure again, you would probably take about 6 to 8 months in Portugal to get it approved. With sub-funds, you could get a sub-fund approved within around 45 days. So this is just a bit of breaking news. We will be launching some new sub-funds this year. I'm not at liberty to provide any details yet, but I think it's going to be very attractive based on the success that we've had with sub-fund 1 and 2 so far. I can say with some safety that we're probably the #1 fund in Portugal in terms of numbers of subscriptions by investors. So we're extremely happy with the way things are going so far. Right. So just in terms of the fund fact sheet, a few details here. We've gone over the service providers to the fund. The fund has an 18-month subscription period, which we honestly do not feel we're going to need because of the way things are progressing. It's an 8-year fund, but we do now allow initial exits in the 7th year. And I think Ilana mentioned the fact that your investment clock only starts ticking once you get your first temporary visa card here. And that generally happens after about 9 to 12 months. So it's 9 to 12 months waiting for that initial card, then another 5 years of investment. So that's already 6. So after your 6th year is when you will be applying for your permanent residence and your citizenship. That could take another 9 to 12 months until you get it. So you're really looking at a 7-year period anyway. So our fund fits in very nicely with the Golden Visa program. In terms of cost, I don't consider the 350,000 euros a cost, as Ilana mentioned earlier as well. It's an investment. So direct costs related to the fund, you have a 1.5% subscription fee, which is a one-off. So based on 350,000 euros, that's 5,250 euros, of which 1,250 is for due diligence, and then you have a 4,000 euro onboarding fee. And that's it in terms of direct costs. Then there is a 1.5% annual management fee, but that is not paid out of your pocket. That is paid for by the income generated by the fund. Okay. How does equity capital make its money as advisors to the fund? Well, we only make money if the fund is profitable. So I think by that you could tell that that we have a huge incentive to make sure that the fund is profitable, but it also means that our interests are completely aligned with those of our investors, our clients. The profit split is an 80-20. That's very typical in this type of fund. So you, the investor, would receive 80% of net income generated by the fund, and then we, together with the fund manager, would receive 20%. However, we only receive that 20% if we first achieve a minimum of 3% IRR for our investors. So there is a hurdle that we have to reach before receiving any shares of the profits. Lastly, I think I'll just mention on this fact sheet, just mention the fact that it is 0% tax for non-tax residents in Portugal. So dividends and capital gains will be taxed at 0% in Portugal for non-tax residents. If we go back to the direct property option, you would pay 28% on any rental income that you generated from your own property, and you would pay 28% capital gains when you sold that property. So a big difference there in terms of from a fiscal perspective. In terms of exit strategies, just to finish off very quickly, we do have a few exit strategies. I think the fact that a lot of our investors this year are Golden Visa investors, they have told us that in the 7th year, when they're getting their permanent residence or citizenship, they will be looking to move to Portugal, and they will be looking to buy a prime residential property. So of course, they've asked us if they can buy a property from the fund. But the answer to that question is yes. The second question that pops up very quickly is, will you give us a discount because we're your clients? And the answer to that tends to be a resounding no, because we'll be looking to sell the properties at the best price possible, and that will benefit all of the unit holders in the fund. The other strategy I think is worth mentioning is the fact that we are working with all of the international real estate brokers present in Portugal. They are bringing us clients, and that's simply because people have not traveled during the pandemic, and buying properties at a distance is not a very appealing exercise for many people. So they have turned to the funds, and the real estate brokers have realized that, so they are bringing us their clients. But at the end of the day, what I think they're really looking for is to get their hands on our portfolio of cherry-picked prime residential properties when we start selling them, because they know who we're buying them from, the top developers, and they know that those will be the easiest ones to sell. So we would very much welcome that initiative from them, and I think it'll be a very strong exit strategy for us. There are other exit strategies such as institutional investors, but I probably won't get into details about that now. But we're very bullish about the prime residential property market in Portugal, and we're very confident about our exit strategies. So I think I'll probably just leave it at that and thank everyone for their patience so far, because I know this can be quite a detailed and lengthy presentation. But I think we'll probably leave it at that and thank Latitude again and Ilana, and I'm sure both of us are now open to any questions that you may have.
Thank you very much, Zhao, for that presentation. Always interesting. I've sat through quite a few presentations with you and clients, and I always learn something new. I think what I really, really like about your fund is just the level of effort that has gone into creating a structure that makes investment sense for our clients. So I'm really looking forward to both funds 3 and 4 that you're not allowed to tell us about at the moment, but I'm sure that you guys will continue to do the good work. We look forward to some questions now from the audience. We did ask for some questions during a registration stage, and we're happy to take those now. Thank you very much.